Are you tired of sitting on the sidelines while others are making millions in the world of cryptocurrency? Well, wake up. It's time to stop gambling your life away at the crypto casino and make some massive, professional, skill-based gains. Welcome to the Cryptocurrency Investing Campus, where I, Professor Adam, transform you into an actual investing professional by equipping you with the most cutting-edge and advanced skills exclusive to the real world only. Trend probability modeling. Stay one step ahead of the game as we stack the odds high in our favor. Learn how to spot trends before they explode in both the up and down directions. Strategic Omega Modern Portfolio Theory. Modern Portfolio Theory is the bank's best kept secret for portfolio management. I brought it into our world and made it 100 times better. This is one of the greatest portfolio management techniques ever created. Last but not least, full cycle valuation. Learn the art of valuing the entire crypto market from start to finish. Develop an eye for understanding where we are and cash in on rare value opportunities. Hear from my successful students who've transformed their lives using these very skills. They're no different to you, but they've changed their lives with my methods. The market is becoming more competitive by the day. Act now and build world-class investing systems in the most practical university on earth. So if you're ready to take control of your wealth by embracing the modern, the cutting edge, the world's class, then join the Crypto Investing Campus today. The future of your portfolio is in your hands. GM everybody, welcome to another episode of Investing Analysis. We're going to have a pre-recorded one for today so we can get through all the material quickly. If this is your first investing analysis that you've ever seen, welcome. This is the daily video where I go through all of the data that I believe is relevant to understanding what's going on within the context of the whole crypto market. However, everything that you will see in these daily videos are the seasonings to the meal, the great big meal, which is our portfolios and the systems that we build. Everything that you need to know as the foundation is in the lessons, and you need to pass the masterclass all the way through, get through the exam, and then do the post-exam education as well to get to a beginner level of understanding of how to form professional portfolios. If you fail to do this, then really none of the stuff within these daily analysis videos will probably be of any use to you. However, for the advanced students, you'll probably get a lot out of these daily videos. And of course, you can listen to the sound of my voice and understand whether or not you should be excited, sad, or whether you should not feel anything and what your expectations for the market should be. So without further ado, let's just get straight into the analysis. So first things first, hilarious that Solana had been shut down, I think, for 5 hours. Watcher Guru said they were having an outage. But look, the Solana price didn't go anywhere. It didn't give a fuck. It was just sitting there. No movement whatsoever at all. It was just relaxing there. I mean, this goes to show that the people who are investing in Solana don't even give a shit about the fundamental, whether or not the chain itself is actually any good. All they want to know is whether the casino will start back up again, which I think is disgraceful personally, but you know what? That's just the market. So we have a slight increase in the medium-term TPI. No major increase, just a slight increase. But of course, I think that is to be expected with the slight gain that we had in total. Wasn't very much. It was only about 1%. But of course, that is probably related to China beginning to increase their liquidity. And of course, we have a new letter from Capital Wars, which of course is always the star of the show when we have our investing daily analysis. So you know what? I'm just going to go through the whole thing with you. I haven't read this yet, so you and I are going to be reading this one together. Global liquidity has hit a record high of $171 trillion. To put some context into it, the 2023 average was 166 and the cycle low was 158. Still, liquidity levels are just 8% above that low. The liquidity cycle typically lasts 5 to 6 years from trough to trough, and we're some 15 months into the current upturn. On this basis, we expect liquidity levels to rise through this year before peaking late on in 2025. The chart below, before I even continue speaking, look at this beautiful increase right here from wherever that was to the current value there. Another increase is always fantastic to see. And this line here has been in up-only mode ever since, what was that? October, November 2023. It's been in up-only ever since. And you know what the funniest part is? Price has gone like this. So where's that divergence going to resolve itself, my friends? There is no second best driver. It's going to resolve itself upwards. Checking the chart. Yeah. October, November, upwards, up only, and it's been going sideways since the new year. It's been going sideways since the new year, and despite that, I mean, you could say that that was when it started going sideways. So there is an entire massive other leg up in the cryptocurrency market that hasn't been realized yet. All of this has been realized. And yet the liquidity has been going up strongly, but there has been no major change in price. So my personal opinion is that everything from here to here has been accurately priced into the market, but everything from there to here has absolutely not been accurately priced into the market whatsoever. I believe that there's probably a gap somewhere the width of this to fair value based upon liquidity. That is what I genuinely believe. And that's one of the reasons why I'm so giga bullish on basically everything and why I'm so fully exposed to everything within my portfolio. It's probably more accurate if you look at Bitcoin. Whoop. So BTC, by my estimations, should be currently at $60,000, let alone what additional stimulus we're likely to see beyond the Chinese New Year, which of course has only just begun. So the potential value that we could be seeing for like where fair value is for crypto right now versus what additional liquidity we're going to be getting over the next month or two, I believe could take us up to within the mid 70s. That is what I believe the fair gap for Bitcoin to be. And this isn't even discussing what the fair gap on Ethereum should be. Look at yesterday's candle. Don't you think it's a little bit suspicious that China is starting to add some extra liquidity to the market and that has a pump? What could the potential gap on Ethereum be? If we believe that the fair value gap between Bitcoin and where it should be is proportionally something like this. But for Ethereum, it could be even higher. I mean, Ethereum hasn't even had its ETF speculation run up yet, which of course is a function of time. I'm not going to be delusional. We still have a long time to go until we reach that point. But we could be talking about $4,000 ETH within the next couple of months, before whenever the halving comes around and we have the sell the news event. If it even is a sell the news event, who knows? That is something where we adjust our sales as we go. Of course, it is going to be based more upon liquidity than anything. I can't say for sure if it's going to be a sell the news event in the future or not. Nobody really knows. I don't know. Your favorite fucking influencer on YouTube or Twitter or fucking TikTok doesn't know. Nobody knows, right? It's all speculative. The only thing that matters, the only thing that can be known for sure is that liquidity drives cryptocurrency prices. Now, the halving does fuck all. The chart below posts weekly global liquidity growth graphs and central bank balance sheet data. Global liquidity is expanding at a strong 14-month, 3-month annualized clip. Admittedly, central bank liquidity growth and hence the shadow monetary base has slowed a tad. This is down to the US Federal Reserve. Added to this, Fed Chair Powell's comments on the outlook of the Fed funds rates has caused the US bond markets and hence collateral values to wobble. Despite these setbacks, liquidity continues to trend higher. You can see this in the 3-month annualized rate of change. Of course, it is not a negative measurement. It has decreased slightly, but it is still positive. And I would mention again that the spread between current speed of expansion and the 12-month annualized rate of expansion, that gap is still significantly wide, which I've mentioned previously is indicative of periods where you have strong positive cryptocurrency performance, like so. These gaps here. These were all periods where you had strong positive performance. Collateral values have wobbled and volatility has picked up following Fed Chair Powell's hawkish comments on the timing of future interest rate cuts. That said, bond markets are in a better place than the start of last year. The MOVE index has declined more. That is fantastic. Beautiful. And he is targeting 60, which is significantly lower than current values. The chart below plots the growth of the world shadow monetary base, the cornerstone of global liquidity. And as you may or may not be aware, using the capital wars methodology, the shadow monetary base actually contributes to the majority, I believe, of global monetary liquidity. And central bank balance sheet data is only a fraction of that. But of course, as we've mentioned in previous videos as well, there is somewhat of a gap between global liquidity, which is included with the shadow monetary base, and central bank balance sheets. There is some sort of a gap there between how those expectations are priced in. The central bank balance sheets are basically coincident, and global liquidity, which includes the shadow monetary base, is more leading. So if you could use both of those things, if you could forecast aggregate balance sheet data, and you could use global liquidity from capital wars, you could form a wonderful, I think, expectation through time that is reasonably well calibrated. Of course, it's very difficult to do, but it doesn't mean that you shouldn't try. Latest data show it's expanding at 7.5 3-month annualized rate. The strong expansion in the shadow monetary base recorded in the recent weeks has been dented by a slowdown in Fed liquidity. The impact has been partially offset by a renewed pickup in the People's Bank of China liquidity growth. In nominal terms, it stands at this. Okay, so you see that it has come down slightly, but it has not been enough to seriously dent global liquidity values. I mean, as a matter of fact, it's still increasing, it's just at a slightly slower pace. So you can see that the 3-month annualized rate of change is declining, but the 12-month is yet to see any significant increases yet. So there is still a lot of scope between wherever zero is and wherever you would reasonably expect the 12-month rate of change to go under expansionary conditions, which will be coming to us in the next 12 to 24 months. So I would anticipate that this 3-month annualized rate of change will fuck around for a little while, and that will pull the 12-month rate of change higher. And of course, that path is going to be quite volatile. Now we have the nominal global liquidity versus world stock markets, and what we've seen in the chart at the top of the report was just a zoomed in version of this, and what we saw there increasing there. And then it talks about risk appetite for investors. And interestingly enough, it seems as though there has been a decline in risk sentiment. I'm wondering if this is due to the Evergrande crisis that we have going on in China right now, where that real estate developer is crashing and they have significantly reduced corporate values. Anyway, the crux of this letter, and this will frame our analysis for the remainder of the video, is that global liquidity is still increasing, and this is something to be celebrated and looked forward to. And whatever potential air gap we get in Fed liquidity, which is not for maybe another month or two, we would reasonably expect this to increase probably very sharply over the near term, and then perhaps over a couple of months go something like this before continuing up like so. Remember, this is a nominal chart, not a rate of change chart. So that is what my base expectation is. The main takeaway being that you can see over the next little short term, not only for what I believe the gap between crypto price is and current values, but also future values, I believe is significantly above current values. So I cannot stress that point enough. Now let's move on. 42 macro, new lead-off morning note from them. The Shanghai Composite rallied 3% as President Xi is said to be preparing more forceful measures to shore up the nation's equity markets. 3% is a lot for a stock market. So for a composite, 3% is a lot. So that's a big deal. Very, very big deal. And that is related very closely to what we're working with in crypto, which is probably, I would imagine, why you saw an increase in Ethereum. I see this as being very encouraging because, like I've mentioned to you already, when we get the next risk-on move in the market, Ethereum will be the leader because its ETF narrative will be the thing that we're looking forward to next. Anyway, that is going to be supported out into the future. Whatever the short-term path is, who the fuck knows? Could go down and then up like Mega. Maybe it'll just go straight up from here. Nobody fucking knows. There's a range of possible outcomes. I know that you fucking NPCs out there watching this video don't like it when people tell you these things, but there is no way of knowing what the actual path of the price is going to be. It's a range of possible outcomes that nobody really knows what's going to happen, but you can reasonably have an expectation of what you think the average of those behaviors is going to be like. And whatever your fundamental and quantitative analysis tells you, that is the angle away from neutral, whether it's above or below that neutral plane is kind of the trend. And you have a volatility cone around it within your mind. But I know none of you will probably understand that because you haven't done the masterclass and you don't take this job as seriously as I do, which will reflect in your portfolio balances. Anything Beijing does to rally Chinese equities for more than a couple of trading sessions will undoubtedly add to the positive global liquidity impulse that our 42 macro weather model has signaled since mid-November. Celebrate. Praise the Lord. Rally those equities. Add to fucking positive global liquidity. Keep it coming, baby. Let it consolidate for another fucking week for all I care, although it probably won't take that long. It'll probably start pumping within the next couple of days. Nothing relevant to us there. The VAMs, nothing relevant with the VAMs. They're all mid-range. Both liquidity models are long. Why is my pen fucking yellow? Both liquidity models are long, which is good to see, which is how you want it. Weather model is long. Excellent. Cool. So I read the policy note yesterday, and I'll just quickly read through this again. Shanghai Composite rallied because of more forceful measures. I already read that. Anything Beijing does to rally Chinese equities. No, I already read that as well. Okay. Yes, so liquidity is going up, and I think there's one chart here. The People's Bank of China's balance sheet is melting up. This is TradFi. This is traditional finance talk for mooning. So we want to see the PBOC's balance sheet mooning because that is a positive fucking driver for crypto. It is a positive leading indication for crypto. We want to see the balance sheet mooning. I want to see more of this. I want to see more of all of this. Send it. Devalue the yuan for all I care. Send it to fucking zero so that crypto can go to infinity. And the rest of it, I don't believe was relevant to us. Okay. Move on. Okay, now let's go through the valuation metrics and we will have a look to see if anything is useful in here. As you would imagine, on a daily basis when we're looking at full cycle metrics, none of them are really relevant. However, this is scaring me a little bit, which is that this metric, I believe, which is I think the top signal is triggered when the blue line, when the blue line and the orange shaded area goes above the threshold. So that is very close to triggering a signal. And I will keep an eye on that. Short-term holder MVRV on both metrics still is above the midline. So that is the crypto quant metric and the check on chain metric are still above the midline. So I consider that as bullish. Even though we're quite high, there hasn't been any profit-taking indications at current price, although there was earlier. and the AVIV gradient is still declining slightly, which is to be expected, I suppose. So let's get into some of my other favorite metrics from CryptoQuant. Good to see the moving average here still declining quite quickly. Although if you were to ask me, there still looks like there could potentially be another week or two before those values cross back up again. But the realized price, profit and loss, short-term profit and loss metric here, it isn't a driver. It's just telling us what has already happened. We could potentially see a reversal straight away from there. And it just goes up. Like, look at this one, for example. That didn't need to reset in order for it to get sent to Valhalla. Maybe what we're going through is something like this, where it's consolidating above its midline threshold, and it just goes up to Valhalla anyway, because it's being fundamentally driven. This is my personal opinion, and what I would consider to be my stance, because the actual nominal metric itself, fuck the moving average, the actual metric itself has gone back to zero and has given us our reset, which is what we wanted to see. We wanted to see profit reset, and it's already done. The moving average crossover stuff is just the fucking the spices, the seasoning on top. It's not really worthwhile considering. Yeah, we have another volatility warning signal coming from the 1 month realized volatility system. I believe it's going to resolve itself upwards. The valuation gap between global liquidity and crypto is so fucking wide right now. It's so fucking wide. And GBTC is not selling anymore. So what possible negative drivers could we have that could overwhelm global liquidity? None. Inter-exchange flow pulse still moving sideways, which is only one of many different inputs in the LTPI. So that's whether it's leading or whether it's lagging, I don't know. We just aggregate the measurements. I would love to see that turn up like that sooner, but I don't think that we're going to get that. Beautiful. So if I turn all these back on again. I wish it would provide us with a sum. No change from anything worth talking about there. Yeah, the NVT Golden Cross is the only one that I was looking at thinking, ooh, is there potentially something there that I need to worry about? That's still a long way away from anywhere I need to be concerned about. Let's leave that there for a second and load up breadth from the Capriol website. No full cycle indications there worth talking about. We already spoke about Google Trends yesterday with being incredibly low. Sentiment as far as Google Trends is concerned is fucking perfect. It couldn't get any more perfect for us if we tried. This is the ideal market condition. I hope you fuckers understand just how easy you have it and really appreciate how easy the game is right now and how easy it's going to be for you over the next month or two. It almost disgusts me. Like, what work have you done? The people that follow the signals will just have their portfolios go up and they haven't really done fuck all. They're going to think that they're very smart. Hopefully you remain humble during the process, because you have to understand that you actually didn't do anything to the market in order for it to go up. You just analyzed it, right? Anyway. we already covered that. Nothing really major that needs to be spoken about there. No extreme values. Breadth is nice and low, which is good. You could kind of say that we're in this type of phase there. I don't know if that really means anything, but I would speculate that it would, considering where the market is. Maybe that means something as well. Anyway, let's look at tactical sentiment. I believe that has increased since yesterday, even further. And the last time that ETH sentiment was so high was before another large pump, I believe. So I'm not entirely sure whether or not this sentiment measure is even accurate at the moment. So I'm just going to move on. Oh, that's cool. I've been looking forward to this for fucking months. It's not super low yet, but it's quite low. It's getting very low. That is a reset of the uptrend there on a rate of change basis. It would be nicer to see it a little bit lower, but beggars can't be choosers. That was 2 days ago. All right, let's have a look at the liquidation maps. Nothing major there from Decentrader. CoinAnk. Let's check the 1 week. Ooh, looking a bit fucking nasty there on the downside with Ethereum. Although I suppose that's to be expected after an increase. Where is that going down? 2258. 2258. Okay, so it's to the bottom of that range again is kind of where you would consider that to be the magnet. What about Solana? After it's shut down. Too many people are shorting it. Which means, ironically, it'll probably go up instead of down. The irony. BTC looking a little bit bearish there. Ethereum kind of looking a bit bearish as well. Solana looking more bullish, really, on a liquidation basis. Now, there's something interesting here I wanted to show you. Don't think I've used the heat maps before, but I pulled these up on CoinGlass. If you go symbol, it aggregates together all of the different exchanges, I believe, and then you can choose what one you prefer. Now, I've selected 3 month here to try and get the highest time frame possible. And the problem with these liquidation heat maps is that all of the heat is kind of proportional to the hottest temperature, and then everything else is reduced. So this was kind of an outlier, and now it's kind of making it difficult to read the liquidations for the rest of the map. But you can still see that above current price, it still looks quite hot. It still looks a little bit hot to me. And Ethereum was the same story. You had a little bit of a clustering there of some liquidations, but now they've been cleared to the upside. And the reason why the whole map is in weird colors is because of this one outlier there, which got fulfilled. So I will continually refresh these as I do my daily analysis, and I'll see if they can give us some alpha as well, because they might be a good complement to the Decentrader liquidation maps. Now, the Capriol BTC heater, continuing on just as I expected. It brings me a lot of pleasure to see this thing behaving in exactly the way that I was hoping it would. And then the stock market breadth is declining a bit. We can see a bit of a divergence here between the Macaulay Summation Index and price itself, which makes me wonder whether or not this is an indication of a decline. Would love to see the progression of how the correlation between the stock market and the cryptocurrency market plays out over the next couple of days. This may give us an early indication into how liquidity is affecting cryptocurrency. You may see a divergence away, or like a reduction in correlation to the US stock market as this declines and cryptocurrency increases, as China becomes a relatively more attractive investment destination. It's a bit of a stretch in the imagination. I'm not confident in that statement. Nobody really wants to invest in China, not directly at least. It would be better to invest in it via proxy. Okay, so with that being said, I believe that covers all of the fundamental data that we have. But the main point that I want you to take away is my perception of where I believe liquidity has taken us so far and where I believe it is yet to take us. So I believe that, again, just to cover that point, I believe that everything from about here, October, November, to late to early 2024 to there, I believe that everything from there to there has been accurately priced into the market. I do not believe that anything beyond that has been accurately priced in terms of liquidity. I believe that the gap between current price and what I would consider to be fair value is actually significantly above current prices, perhaps up here at current prices. And because of an expectation of increased liquidity into the future, both a marginal increase from the Fed and a larger increase from China, that by the time this gap is actually resolved, it will still be significantly higher, and that this is a conservative estimation there. Between here and here, it will be higher than the current gap, I believe. So ultimately, over the next couple of months, the gap between where we are right now and where I believe fair value is, the margin is just fucking massive. One of the largest and most obvious margins that I've ever seen in my whole career. And the fact that the timing is so good as well. Remember yesterday's stream where I opened this up and I went, oh, okay. Why did I put the early boundary of this green shaded area on the 7th? Why not the 8th? I move it over one, and then Chinese president Xi Jinping, he comes out and says we're going to be more aggressive with the market on this exact day, on the 7th of February. Why not? It will be a fucking miracle if you get prices like this before it goes back up again. If you get these prices, you better understand the opportunity that you have. Now, I know that I'm being very enthusiastic about the future prospects. Don't come to me and ask me how much of your money you should invest. That's your choice. Fucking don't ask me about you. I can't give you financial advice, and nothing I will ever do will be financial advice. I can't ever possibly know how much of your money to put in. You need to know and understand the characteristics of that asset class and the volatility of it, and whether or not that's going to be appropriate for you, and how much risk you're willing to take on for the opportunity that's on your table, and the composition of your portfolio. If you want to know what the composition of your portfolio should be relative to your fucking risk appetite, or like a very brief discussion on that, in the final probably third of yesterday's daily investing analysis, I had a little bit of a rant on that. So maybe you might find some use out of that. But anyway, I digress. Let's have a look at some of the other information that we should be looking at here. So total's good. Liquidity proxy is still down a little tiny bit, although I do expect that to resolve upwards from this point onwards. We've already covered BTC USD. ETH USD, whoa. Coming up, I'll keep an eye on that one. And I'll keep readjusting that within the scorecard spreadsheet. Solana, still amazed that hasn't declined at all. That could be potentially very bullish. No news from those ones. And that's pretty much all I'm willing to talk about for the moment. XMR took a big fucking dump yesterday because it got delisted from Binance. So, you know, if you could fucking get futures, if you could find a way of getting futures exposure to XMR, you would long this position. I'm telling you right now, if you were a trader type, I mean, look at the zone that you've been gifted with. I mean, what the fuck? If you knew that XMR was going to be around for a while, would you not purchase this location, especially when you know where the whole crypto market is going? I've already spoken to you about the fair value gap. Even if you took a conservative measurement and said, okay, well, there's a fair value gap that looks something a little bit like this. That's one of the largest gaps that you could potentially make. This isn't a signal, by the way, and I personally wouldn't take this trade. I'm just saying that this is potentially something that could be exploitable. Sometimes there is opportunity in chaos. And that is pretty much all I can think about talking about. So global liquidity was the main takeaway. So thank you very much, guys, for your time today. Hopefully you enjoyed today's investing analysis. Remember, get through all of your lessons, pass the masterclass, and don't just stop at the masterclass either. As you should be aware, we have postgraduate levels 1, 2, 3, 4, and 5. The masterclass is just the beginning. And unless you develop your systems yourself so that you know how they're run, you're going to be lost forever. So take this activity seriously like a professional, or you will continue to get pleb results. There is literally no other way of putting it. That is the truth. You will get pleb results if you don't act like a professional. So I will see you tomorrow for another episode of Investing Analysis. Talk to you guys later.